Hi, I'm Steve Shaw, founder of Bondsavvy. As you're thinking of whether to subscribe to Bondsavvy, I want you to think of a few different questions. First, and most importantly, is what kind of bond portfolio do you want? Do you want what I refer to as a select all-star portfolio? Or do you want kind of what everybody else has and just what I refer to as a rec league portfolio of thousands of bonds, like a bond fund, where you don't really know what's in your portfolio every day and it's not really suited to you? Do you want to become a better investor? Or do you just kind of not really care and you just kind of want to throw money into a fund and not really know why it goes up or goes down? And do you want dedicated expertise at a reasonable cost? As we think of those questions, the way that we address those is first, upon becoming a Bondsavvy Premier subscriber, you gain access to all of our existing recommendations and all of our past recommendations that we've previously exited. And we're going to show you in a moment what the subscriber dashboard looks like and everything that you get as a Bondsavvy subscriber. We make new recommendations every quarter. We update our recommendations every quarter with the goal to achieve total returns that beat bond funds and that beat the bonds quoted yield to maturity when we buy it. It's an active approach. After you've been a Bondsavvy subscriber, while you're a Bondsavvy subscriber, you're going to learn what makes a successful bond investment. You're going to learn how we make investment recommendations and everything that goes into it. And over time, you're going to become a better bond investor because you're going to truly understand how the market works, what drives success, as opposed to if you're a bond fund investor, you've got no idea. You're not going to be any better of an investor in 10 years than you are today because you're not going to have any idea as to what drives performance of those funds. And lastly, we're completely focused on individual corporate bonds. That's our expertise. We offer a flat fee so that the more you invest in bonds, the less you pay per dollar you invest. We believe that's a much better deal than paying a financial advisor 1%, who then puts you into a bond fund which charges even more fees. And think about it. You pay a financial advisor 1%, that bond fund is going to charge, could be another quarter point, could be another half a point. So that's 1.5%, which is a huge portion of your return. So we're now going to show you what you get as a Bondsavvy subscriber and how we seek to achieve all these different objectives that we just talked about. This is a section of the Bondsavvy Premier user interface. I'm going to walk you through why it's set up like this. And so this is part of what we refer to as the current tab. So this shows our current recommendations, and this is a set of recommendations that we made in 2025, and obviously we have the specific recommendations are covered over. You have to subscribe to see those recommendations. But the way that we work is that we make new recommendations every quarter. So you'll see that on September 4th of 2025, we made a set of four new investment recommendations. And they were supported by a presentation, which we're going to show you in a moment. But what we do is we present new recommendations, and then we update those recommendations every quarter. So before this September 4th, 2025 set of recommendations, we made a presentation on May 29th, 2025, which had six new recommendations, including one bond, Occidental Petroleum, that we've previously exited. You'll also see that in between, and these presentations where we present new recommendations, that's called the Bondcast. And then also every quarter, we update all of our recommendations during a presentation called the Super Bondcast, which we're going to talk about a little bit more in a moment. So what we do is when we make a new set of recommendations, the work is just beginning. And what we'll do is we'll make a new set of recommendations, which I'll show you in a moment. And then as we update those every quarter, we look and see, okay, where is the bond priced? what is it yielding? Have the financials changed? And is it still a buy or not? And so in this case, when we look at this particular bond that's above this Occidental Petroleum bond, this is a bond that we recommended at 90, about 98 and a half. It had gone up to about 106 and a half by March 30th. And this was a case where when we looked and we saw, okay, here's where the financial metrics are, et cetera, we made this bond a hold. And compared to some of these other bonds where this bond was at 78.85 back on May 29th, 2025, and the bond price had increased a little bit, but we still saw this particular bond as a buy, in this case, a buy to 81 and a half. And we'll get into the analysis in terms of how we ultimately decided that in a moment. But what I'm going to show you now is a presentation called the Bondcast. And if you haven't already watched the Bondcast, we have a sample recommendation. If you go back out to the main Bondsavvy site, you click on the menu samples, and it's the first menu item that you see there. If you click on that, you'll be able to watch a full sample edition of the Bondcast. It's from several years ago, but you'll get the gist of it in terms of all the analysis that goes into presenting new bond recommendations. But I'll bring up this edition of the Bondcast. So you have me up there presenting, and I'll show you. Let's see. Well, what we're going to do is I'm just going to, so it's a live presentation, but then we obviously record it and then we post it in the subscriber area as you see here. We start the Bondcast with some high level analysis in terms of where are US Treasury yields, where have they been trending, what's been driving that, where's the economy, what are some overall things that are going on in terms of specific industries. All those different factors inform what type of bonds we might be looking for. Are we looking for bonds in a particular industry? Are we looking for shorter? Are we looking for longer dated? Are we favoring high yield versus investment grade? We then go through our investment analysis, which you can see in that sample edition of the Bondcast, where we're going through the company's financials and seeing, okay, what do the margins look like? What's the growth? What do key credit ratios look like? What are upcoming bond maturities? We'll then do a deep dive on each of the issuing companies to make sure that you understand the business. How is it driving growth? What types of risks are there? What are the trends in terms of the financials? Is it headed the right way, or is it stagnating? What's the trend in bond ratings? What are some of the triggers if it was a potential upgrade or downgrade? What does the company's capital structure look like? What does capital allocation look like in terms of if it earns $1 billion, what is it doing with that money? So the goal with every edition of the Bondcast is narrowing down the investment universe to a select number of bonds that you can then decide what you want to add to your portfolio. Because it's really difficult for really any investor who's not focused on bonds 100% of the time to say, all right, of the 11,000 corporate bonds that are out there on electronic brokerages, these are the ones I want to own. So we've taken it down from a massive universe, we've narrowed it down to a select group, and then we show you the analysis so that you can then decide, okay, which of these bonds do I ultimately want to add to my portfolio? Okay, so as I mentioned before, every quarter. So now these are some of the more recent presentations, and we've got other presentations for Bondsavvy Premier. We're making new bond picks on June 25th of 2026. We're going to be updating recommendations again on July 9th. So you'll see the cadence of everything, where we updated recommendations October 9th of 25, new recommendations November 20th, update again the Super Bondcast January 8th, new recommendations March 5th. And then we updated recommendations most recently on March 31st. And I'll show you briefly how we cover this. Now, I can't show you specific slides of this because it shows the names of the different bonds. But just to give you an idea, again, we're starting with a macro backdrop in terms of what's driving bond yields, what's going on with, in particular, US Treasury yields, what's going on with credit spreads, anything going on with the overall labor market, specific economic analysis that evaluates the health of consumers and all those different things. We're then going into each of our issuing companies and discussing what their financial performance looks like in terms of revenue and cash flow growth. Have the bond ratings changed? And then we'll get into the specific recommendations, as I was alluding to before, where we'll say, okay, here's what the company looked like when we made the initial recommendation. Here's where the bond was priced, and here's where we are today. And whether the company's financial situation has changed material, what it's looking like, and what our ultimate recommendation is on that bond, whether it's a buy, sell, or a hold. So we go through that presentation and we present that to our subscribers. Again, we post in the subscriber area. Shortly after that, we post a PDF. And what the PDF includes is it includes the base presentation, but then it also includes about 50 pages worth of write-ups on each individual issuer, where it goes through that issuing company's financial performance, any forward guidance that it's provided, what its balance sheet looks like, upcoming maturities, other factors that can help us assess whether a bond issuer is heading in the right direction or whether we might want to change a specific recommendation. So you'll see, so that's the biggest part of our of of what's in the Bondsavvy subscriber area because it reflects all of the updated recommendations, all of the initial recommendations, but there's a bunch of other stuff as well. So as I mentioned, we update our recommendations every quarter, but then we'll also provide updates in between quarters, depending on different things that happen in the marketplace. So for example, there could be a merger or there could be a tender offer that we need to make a recommendation on. And here are two examples. So March 27th of 2026, we recommended there was a pending tender offer for bonds of one of our issuing companies. We recommended that subscribers reject that tender offer. This one for Occidental Petroleum of 30, we actually recommended that subscribers accept that tender offer. And we provided folks a full write-up on our analysis behind that recommendation. And so these are all things that are included in the Bondsavvy Premier subscription. We show returns because we want to know how every bond is doing. And I don't believe there's any other service that's out there that shows you the performance of every single investment from the date that the initial recommendation was made or the initial investment was made until the current date. You look at bond funds, that ain't happening. They show a blended return. Financial advisors certainly aren't doing it. That you're lucky to get any financial any returns information from them. We show you the performance of every single recommendation. For these returns, these obviously show the names, but you can see our returns if you click the performance button on the menu. We will show you now our prior. So Bondsavvy's recommended about 166 bonds total, 156 within the Premier service. And these are our exited recommendations. So you'll see this was one bond, Hecla Mining. Next one, Occidental Petroleum, which I mentioned. So we show the date at which we recommended it, the offer price, and then the date at which we sold it, and the sell price, the total return. So in that case, from May 29th to March 9th, so a 9-month period, we achieved a total return of 9.11% compared to 5.77% for the iShares HYG ETF. So we outperformed there. I showed you the underpinning for that specific recommendation. We also showed the $10 bond return. So had you bought 10 of these bonds, which would cost you a little bit more than $10,000, your total return would have been $950. That's just for a 10 bond investment in 9 months. So it's important when people ask, well, is the Bondsavvy subscription worth it? So this is a total return over 9 months for one bond recommendation, assuming you bought 10 bonds. We show the rationale for selling for all of our picks. So oftentimes the sell recommendation will be made during the Super Bondcast, and so we indicate when that is, or if there's a specific note. We'll also show the upcoming presentations. There are a few other things up top here. For new subscribers, we want to make sure that as soon as you become a Bondsavvy subscriber, that you're able to gain full value of our service. And so we walk through everything in terms of how everything works. A lot of it you should have gleaned from what we just discussed, but we want to make sure that you're benefiting from every piece of information that we're providing, because our goal is to make sure that you have all the information that you need to make a successful corporate bond investment. You can click here for Bondsavvy Forum. So anytime a subscriber asks a question, we ask him or her to post it into Bondsavvy Forum. I will then answer that question, and then all of our subscribers benefit from that answer, because this is you know, I'm the person who runs the company, does all the financial analysis, but it is a community that we've built in that many folks are at a same level. So there are many experts that we have who are subscribers, and many folks who are new, but we want people to be able to ask questions, to have those answered promptly with a thorough response. You also have the ability to manage your account. You can update your account, whether it's updating your email or credit card or subscription status. There's also a Corporate Bonds 101, which talks a little bit more about corporate bonds and our overall investment approach. So that's the Bondsavvy Premier subscriber area. Again, our goal, I founded this company back in 2017. Our goal is to make bond investing more simple and more profitable. And we do that by narrowing down the bond universe, by selecting bonds we believe can outperform, and by actively updating those bond recommendations until we decide to ultimately sell a previously recommended bond.